Hello everyone, today is Tuesday, October 20th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. We're going to jump right into our market technicals dashboard here on Tuesday. You can see stocks closed the day mixed on the session here. Actually, in fact, the Qs, I believe, everything here was in marginally positive territory. I pulled these numbers and it looks like I pulled in a little bit of the immediate after hours action, which turned the Qs negative. But I think everything here was just marginally positive on the day. Nothing too different than what you see here. 5-day change numbers also in firmly negative territory now. Dow, SPY, IWM down about 1 to 2%. The Qs down over 3.5% over the past 5 trading sessions. And we are below the 10-period simple moving average in all the major indices, still yet above the 50 and the 200 SMA. If we take a look at sectors here, we've got industrials, utilities, materials. Those are our top 3 relative strength outperformers here over the past 5 days. On the downside, we've got biotech, technology, and communication services down 3 to 5% over the past 5 trading days. And in terms of major markets, we got VIX at the top slot here, 12% to the upside, followed by silver and oil. And on the downside, we've got the S&P 500, we've got natural gas, we've got TLT, relative underperformers over the past 5 days. A little bit of a interesting mix there, namely looking at the TLT and the SPY, both down over the past 5 trading sessions. So let's take a look at some charts now. Let's jump into the action here. We've got TC2000 open. This is our equity market grid. Price itself is the white dashed lines on these charts. And we're looking at a custom smart trend filter that we've developed to measure price volume, trend strength, which are the colored dots. You can learn more about that at the link in the top right of your screen now. So if we look here at the weekly picture, nothing has changed. Our outlook has remained the same, basically buy signals, uptrends right across the board in all of the major markets. That's been the same sort of picture story that we've had now for quite some time. If we go down to the daily chart, that also is the same picture here across the board. We've got uptrends in all of the markets, and that includes sort of the the volatility shot across the bow that we suffered in the markets yesterday. We saw selling pressure across the board. Notice across all of these markets, despite yesterday's selling, we still did not get back to our trend filters. We did not violate the direction. Nothing changed over yesterday's selling. Now, of course, if the selling continues and if we see more pressure follow up throughout the rest of this week, then these trends are likely to be in jeopardy. But at this time, that hasn't happened and our outlooks remain the same. So let's get a closer look at what we're referring to here with some candlestick charts with the S&P 500. And our message has been pretty clear here, I think, over the past few videos. The last notable sort of technical development here for this chart was this session right in here as we started to break above 3,400. That had been the intermediate term level that we have been paying attention to on the upside. It was resistance back here in early September. It was gave us a little trouble here a couple of times in late September, early October, and then we finally resolved above it. So that was the last sort of technical development there where the bulls got the breakout. Trend filters were positive at that point, and we kind of launched into the middle of this range here. And then we were sort of at this decision point where we were kind of in the middle of this range. We had the all-time highs up around 3,580. 3,400 was, again, the breakout zone, and we were in no man's land, for lack of a better word. We essentially found and topped out around or basically on exactly the 12th here on its 4th day up in a row, and then we've been selling off and falling back towards this 3,400 since that day. So right now, as it stands, we are still holding above 3,400. That's been our line in the sand here. If we start to break down below 3,400, particularly on heavy volume, big expansion in range, a big nasty bar. Like if we get another one of Mondays, sometime in the next couple of days that just, really see some range expansion back below 3,400, that is what's going to cause me to be more pessimistic about this market. But until and if that happens, I think right now we're getting that pullback. We're working off overbought conditions. We're coming back towards a technical breakout level. And what you basically want to see here, if you're bullish on this market, is the cavalry to sort of arrive and support this market, put in a higher low around 3,400. Notice today we got no follow through to yesterday's selling. So again, yesterday was a fairly loud session to the downside, a very ugly picture here would essentially be immediate follow through, so another big sell day. That didn't happen. So we got an inside day instead, and that basically means we should be on alert. We should still be paying attention. The trend is still higher right now on multiple time frames, and so we want to be watching and measuring this action here if we do sell off any further into the 3,400 level, and pay close attention. So right now, that's sort of the outlook here. Bullish trend, pulling back to retest. Let's look at opportunities here. Let's look for support to kind of step in, and we'll take it sort of one day at a time. We've got plenty of headlines to chew on. We've got earnings season, which we are in the midst of right now. We've got all of this, the stimulus drama that, is continuing to lead the market around with all the different headlines. And then, obviously we'll be going right into the primary election in the first week of November. So there's certainly a lot of catalysts here. So you got to stay sharp and pay attention on that risk management side. But for now, trends, despite all of that worry, anxiety, and noise, trends are higher, and stocks are currently all in pretty supportive patterns. So let's be cognizant of that. Obviously, those things change day by day, but for now, that's sort of the story. When we look at the Russell 2000, really, I mean, this actually looks, arguably even better than the S&P 500. Now, of course, on a absolute basis, the S&P 500 is above its prior all-time highs. So that is, obviously a better stance in terms of S&P, but in terms of just recent action here, I mean, this is pretty healthy consolidation. We're not really giving anything back here. We broke above 159. We're just moving sideways here, kind of consolidating through time. If this turns into a topping formation here, where we suddenly break down and come crashing back below 159, then that changes this picture. But for now, volatility seems to be compressing a bit in here. Stocks, or at least Russell 2000 here, moving sideways. So let's keep an eye on this one. Ideally, it stays over 159 if you're bullish on this market, and then you get breakout and momentum cavalry to come in above 164. The Nasdaq 100 is it's very similar to the S&P, frankly. It's getting back down towards this 280 level. So this was its relevant breakout level that occurred about 2 weeks ago. You can see it had, 5-6 days down in a row. It put an inside session in today. It's holding above 280. It's quite close to this level. So it's at an interesting point. It's at an inflection area. Trends are still higher here. Market's still suggestive. The structure-wise is supportive. We'll see if that changes in the next couple of days. But ideally, you want to see higher low get put in here kind of sooner rather than later. So that's it. That is really the kind of story here in terms of market structure. We had a very loud, volatility day, so to speak, yesterday. In fact, let's go to the VIX right now, because that was a chart I wanted to talk about today. You can see VIX, again, this range here, this chart shouldn't be too unfamiliar. We've basically been talking about the VIX going sideways here between 25 and 30. Essentially, when the VIX gets up around 30, then it's usually a time to put back on risk, to buy stocks, to let off the protection. And then when VIX gets down around 25, you're probably trimming some stocks. You're looking for short opportunities. You're putting on protection. Again, it's easier said in hindsight, because these all come at very emotional times. But that's been the pattern that's worked, and it'll continue to work until it doesn't. So we're back at the top of the range. We ask ourselves again, is this time different? Maybe it is. Maybe we get the big sell-off and the big fear starts into the week or two, preceding the election. But until and if that happens, we're still range bound here, and we're still in this same volatility regime that we've been in. So that's sort of the way I'd be looking to navigate it. VIX is at the top end of the range, stocks at the lower end of their range, bouncing here, finding support. That is the logical sort of evidence-based approach that I'd be looking at for this market. So that, I think, covers it all. Let's go to some other markets here. Let's go to credit screen. We look at VIX. We just talked about it's basically printing. Let's go to the daily chart. It is above trend, but it's still, you notice yellow dots getting printed here, which basically means it's not clear for takeoff yet. It's still just moving sideways here, and that's sort of exactly what we talked about. TLT, I definitely do want to talk about this in just a moment. You can see this is back towards lows, printing again a bearish signal. It got all the way up to our trend line, our trend filter last week, and then starting to roll over. So I do want to talk about that in just a moment. If we go to commodities first, though, if we go to the daily chart on all of these instruments, you can see a couple of developments here. First, top right, silver printing bullish, a buy signal yesterday, getting back above its trend, following through today nicely. So silver for the first time, well, not really in a while, because we did get that print on Monday, the 12th, back to a buy signal, and then you can see that starting to work up again. So that is encouraging. You can see gold still hasn't happened yet. We still haven't got a new fresh buy signal, but we did get a buy signal back here on the 12th for GLD as well. And generally speaking, that's the direction we want to lean once we get one of these directional indications printed. So gold and silver look to be turning up. Oil turned up, so you can see a bunch of green dots getting printed here recently. DBC also. So commodities in general here starting to work again. Dollars rolling over, and that trade seems to be kind of in motion. I do want to talk about a couple individual sectors here. So I talked about VIX already. I want to talk about TLT. I think TLT is actually kind of interesting because, we're seeing persistent weakness. We're seeing, this really start to extend itself. And the fact that this rolled over so sharply back to these lows, picked up a little volume today. It's a little bit, kind of discouraging or pessimistic here. If we go to, our weekly chart for VIX, for TLT. So if we go to we put our smart trend filters on here for the weekly picture, you can see that actually printed a bearish signal on the weekly last week. And we're continuing so far this week with a bearish signal. So this potentially is a regime change here for TLT. Obviously the Fed is sort of involved in this market, so we'll see, where they let this go, so to speak. And I don't necessarily want to go down that path, but TLT is starting to roll over, starting to get some regime shifts here, starting to get persistent weakness, which we haven't seen in some time. So keep an eye on that. That's definitely something that I'm noticing here. If we get some type of strong rip reaction off of this 159 lows, that would be very timely, right? So if TLT just gets a strong move and starts, really launching higher again, this would be the time to do it. Maybe one more day of sell-off, get a new low here, and then it rips higher. That would be pretty classic, but something to pay attention to. I think it's notable, and I wanted to talk about it in today's video. IBB. So this has been the weakest here, one of the weakest this week. Now this was one of the strongest over the past several weeks, but you can see it kind of ran right up into, let's go to this view here, kind of ran right up and almost retested the prior highs. It kind of fell a little bit short, and then it had this gap down, and it's starting to, fall back down into this 136 zone. So for IBB, I mean, this is, if you miss the breakout, then here's your pullback. You want to see the buyers step in here. You want to see support kind of come in around this area. If we start to continue to accelerate lower below 136, then we might have some problems here for biotech. So something to keep an eye on. I do still have well, frankly, lots of positions underneath in biotech, in the XBI, which is doing a bit better here. And this is where your biotech, ETFs matter, because XBI is much closer to its highs. It made a new marginal high, so there's some interesting developments there. I do still have a position in LABU, which is the 3X ETF. I've had this on since early September, scaled some, but still have some on. So and then other positions outright. So we'll see how that fares out. A couple of other sectors I want to talk about is XLU. Again, no surprise here. We've been highlighting this for quite some time. It's back to the, it broke out and it just moved sideways here. No real big dip at all. It's still moving sideways, but it looks quite healthy, quite bullish, and looks like it just wants to extend. So like the look there, continue to like the look there. And I want to actually highlight XLB, which I think is quite interesting as well. Notice where this is on a relative basis, right back to its prior highs, consolidating nicely, contracting nicely here. This is poised and positioned pretty nicely. So that's it. That is what I have for the midweek video. Lots of interesting things, lots of things we talked about. VIX at the top of the range, TLT being persistently weak, XLU, XLB that looked pretty primed, biotech at a retest spot, earnings season coming, so lots to sort of chew on in today's video. So I hope you're doing well out there. Hope you're trading well. What did I miss? What are you watching over the course of this week? What's got your attention? Love to hear it below. Leave a comment, and happily interested in knowing what you guys are all looking at. So that's it for me. Thanks as always for tuning in and watching. Every Tuesday we do videos like this. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here tomorrow for some swing trade ideas.